Let us get into the gist of it, starting with the very first question. Where do we stand with open banking across the globe, and what are developments in the Middle Eastern and African region? Luca, could you just give us a quick overview on open banking?
Yeah, absolutely. More than happy to do so. So yeah, Stefan, open banking is a movement. It's a global movement, and at the very heart of the movement, there is the idea that the banking data of a customer of a bank is owned by the customer itself. So basically, the idea that the banking data, even though it's stored in the bank IT system, the user has to be able to take it out and make the most of it. So in the last few years, we have seen this trend of basically fostering innovation by forcing banks to open up. And as you can see in this picture here on the right-hand side, there is this interface which is called XS2A for the Europe jurisdiction at least, from where third parties provider, upon the customer consent, can get access to their own banking data and also initiate payments. So that's the very, very let's say the fundamentals of open banking.
Luca, as we know, the role of the central bank in setting out the open banking program within a country is not uniform across the globe. What are we seeing in terms of the different scenarios used that we see happening across the globe with regard to central bank's approach to open banking?
Yeah, we have seen many different approaches. Actually, there are really a multitude of approaches. We have run a survey back in 2019 where we wanted to understand better, in every jurisdiction, what is the approach of the regulator, if any. And what we are seeing is that basically there are two lines of differentiation. Basically, the open banking can be a mandatory regime. Basically, the regulator, the central bank, or other governing bodies are enforcing this regulation, or it can be voluntary. So the market is basically organizing itself and is basically coming up with a regulation, a sort of regulation. And then there is another axis, which is the vertical one. So the open banking regime can have standardized interface or can be non-standardized interface. So basically the difference is that depending on the specific jurisdiction characteristics, banks will have to comply, or sometimes banks have the option to comply. And sometimes banks have to comply with the specific API standards, and sometimes they have to comply with more flexible API standard. As you can see in this chart on the left-hand side of this slide, we wanted to locate some jurisdiction, and some are green, some are blue dots. Those blues are basically those jurisdictions that are not including payment initiation in the open banking regime. So as I said before, open banking is access to data, but also initiating payment with your banking data. So the payment initiation is not always included, but it's very important, and we will see maybe later during the presentation that payment initiation is a very it's important factor also for fostering financial inclusion. What is important? Sorry.
Luca, I was just going to say, in your experience, would you say that the countries where we have a mandated approach to open banking, does this stimulate a better uptake by banks and fintechs? Would you say that the mandated approach is a better approach to open banking in a country?
Yeah, Stefan, that's a very good question. Look, banks have to find a way to digitize, right? Because the return on equity on banks, if you look at the stock exchange, if you look at the pricing of their equities and stocks, is very low because the market think that in the future probably the revenues of banks will not be as good as they are today. So if there is a regulator that is pushing for digitalization, that's good. This is probably a trend that is more seen in the Europe, in the UK, and in the South America jurisdiction. In Asia, is more a voluntary approach. So in Asia, the regulator is more relaxed in a way. So the market is more dynamic.
Okay, we've also seen across the globe various, as we've discussed, various approaches to open banking, but quite a lot of these approaches have also sort of replicated or employed different scenarios. And emerging in Europe, we have these two scenarios: the UK open banking approach versus the Berlin Group PSD2. Luca, what are the differences between the UK open banking versus PSD2?
Yeah, so those are probably the oldest regime that we have that we can look at today. So they are both almost 2-3 years old. They are both regulated. The scope is very similar. They both include payment initiation. They have some difference in authentication and consent flows, but they are both truly open banking regime. What's the main difference between the two? The UK open banking is regulated with a specific standard of the APIs that banks have to expose. The PSD2 instead has different flavors. So given that EU is a very fragmented market, even today, the regulator, the European Commission, wanted to leave some freedom of implementation, because probably the European Commission knows that every jurisdiction has different. So banks in every jurisdiction have different core banking system. So in France, for instance, most of the banks have similar core banking system. In Italy, the same, and Germany, the same. And then what we have seen is that almost every jurisdiction has developed its own standards. STET in France, Berlin Group for continental Europe and a little bit of Southern Europe, Polish APIs for the Poland jurisdiction.
So if I am a fintech then, Luca, and operating across Europe, this diversity in terms of some of the specification is probably going to be a challenge for me then.
Absolutely, it is a challenge, and it's a challenge, and everybody is saying so. So definitely, banks have to do the best to reduce these frictions, because the partnership with third-party providers is key for success.
Over the past 2 years or so, we have seen quite an increasing interest in open banking. Central banks across the Middle Eastern and African region have begun some form of draft. We've seen banks setting up consortiums to consider how best to approach open banking. What is your reading, Luca? What do we see going on in the Middle Eastern and Northern African region?
Yeah, so the Middle East, Northern Africa, it's a very interesting region. First of all, because I think open banking will help with financial exclusion. So financial exclusion is a hot topic in the region, and for sure open banking will help for this. Right now, there are many jurisdictions that are working towards an open banking regime. Some are readier than others. For instance, Bahrain is probably the first and only that has issued API standards. Kingdom Saudi Arabia is following suit. Maybe end of this year we'll have some standard published. And then there are some other jurisdictions that are working very hard, like Morocco, like Egypt too. The feeling is that probably it will be a regulated approach for most of them. As we said before, the voluntary market-led approach is something that is more for the Asian countries, but we will see. I mean, there is nothing written in stone as of today.
Okay, then. So, what are the primary differences, the market-led approach versus the regulated approach? What are the pluses? What are the minuses?
Yeah, so the regulated approach is it's important for for fostering innovation in a market. So if the banking industry in a specific jurisdiction is not really able to digitalize by itself, then the push from the regulator is really helpful. And pushing from a regulator is not a bad thing. It's actually a good thing because it's saving the banks in the long term. Otherwise, their business will become obsolete and taken over by big tech. The market-led approach is good for leaving the system more dynamic. We have seen that in the Asian markets, the scope of APIs is broader because there is not a regulation that says, "Hey, bank, you have to open up accounts and payments." It's more like left to the innovation officer, let's say. So if the bank is feeling that opening up APIs for KYC or for identity, it's going to be a good business, they will open up. Otherwise, if there is a regulation, the bank tends to focus on the regulation and they don't look beyond. That's unfortunately the case in Europe.
You have mentioned financial inclusion benefits. How does open banking contribute to improving financial inclusion?
Yeah, that's a good point. So sometimes banks do not have the economic incentive of serving some segment of the population, simply because it's more expensive to serve than not to serve. So the margin is super low. It's a very low margin, high volume business sometimes when it comes to micro payments, when it comes to micro loans. By opening up banks, they can basically let third parties providers like fintechs to do that job for them. And typically fintechs have a lower or a smoother cost structure, able to gain some margin also into this, also by doing business with micro businesses like the food stall in the city center, rather than the very small business in the rural area. That's typically the use cases.
Okay. So the regulation, which is essentially intended to foster more open transaction, does carry a number of fairly significant benefit for the consumer at large. Looking at Bahrain, having been the very first country in the region to have sort of stepped forward with a set of clearly specified APIs, what do we see happening in Bahrain?
Yeah, Bahrain is actually a very interesting use case because they have practically, they were really inspired by the UK open banking regulation. So the standards that they are asking banks to implement today is very similar to the UK open banking standard. So it contemplates payment initiation, account information services, some essential services like event notification. But what does it mean? It means that basically it seems that there is a convergence towards the UK open banking API standards, something that we have seen also in other jurisdictions like Mexico. And this is good for third parties, because if there is a worldwide unified standard, that's something that third parties will really be happy.
Cool. Luca, just to close this first section of the webinar, what would you recount as key learnings from Europe that banks across the Middle East and African region should account for as part of the program? What do you see as some of the major themes, major learnings that could be accrued from Europe as a bank in this region is about to embark on its open banking program?
Yeah, that's probably the most important finding that we found when we ran the survey last year, when we asked third parties what are the biggest pains that you have when you are accessing API portal of banks. they always come up with the same answer. The problem is that sometimes most of the times onboarding is quite troublesome. The access to data is not really straightforward, and sometimes the documentation is not the best in class. So the developer, in other words, the developer that is landing on the API portal of a bank is struggling to understand what the APIs are for. So they just leave the API portal and they go to the next one. And this means that the bank is missing out some business opportunities. So banks in the Middle East, North Africa region should really take this seriously, keep developer experience in mind when deploying API portals.
So a key point here, right? Banks are traditionally fairly accustomed to serving the consumer or small, medium, large enterprises. But right now with open banking, the idea is that your customer is no longer the consumer, no longer the enterprises, no longer the businesses, but your customer is in fact a developer. Is that
That's
a
right.
good way to sum it up?
Absolutely. That's it exactly. So the banks are experiencing a new digital channel, so a new way of selling services and products.
Thing.